Hi and welcome to the Market Alert for Friday the 6th of May 2022. So it's a bloodbath. Markets everywhere reverse all FOMC moves, and as it says here, and it's gone. Yeah, well, I'm not surprised. Are you? I mean, after Powell actually made that error by saying he would never increase rates by 0.75% points in any of the forthcoming meetings, the reality kicked in. It took until the Dow opened for this to occur, though, but it did. It put a straight reversal in the Dow, finishing down 1,063 points. As it says here, what a crazy 24 hours. And this sub-headline actually sums it all up. If we see capitulation from recent dip buyers, we have more downside, and I couldn't agree more with that. Absolutely. Today's going to be interesting as well to see if the market will hold. And of course, today we've got this April Payroll preview. Get ready for a big mess. So I don't know what Zero Hedge knows that we don't, but it will be big enough to detail the Fed's tightening. So yeah, non-farm payrolls out at 1:30. We'll look at those in more detail in a moment. This woman, Yellen, admits spending did feed inflation. And so look, inflation is a matter of demand and supply, never. And the spending that was undertaken in the American Rescue Plan did feed demand. Well, of course it did, but the trouble is there's a supply issue as well. Yesterday, as we predicted, interest rate raised by to 1%, not by 1%, to 1%. Bank of England, despite predicting big hit to economy ahead. And then interest rates, Bank of England issue a UK recession warning and says inflation could top 10% this year. Which planet are they living on? It's already above 10%. The latest as the Bank of England increases the base rate to the highest level in 13 years. Amazing, isn't it? Just let that absorb in there. The highest level in 13 years. It's shown they've not been able to do absolutely anything since 2008 crisis. And 1% is the highest in 13 years. That's how they've lost control over all of this. And that's why you're starting to see it all fall apart. Because the bogeyman of inflation has come out of nowhere, apparently. And now they're painted into a corner. Increase interest rates. It creates, obviously, more expensive borrowing, i.e. mortgages, etc. Higher food prices. So everywhere you look, you're being pinched in the finances. It's incredible, and yet they're going to go ahead with this, and they've got no choice, because if they don't, then the supply issue, if you think of it this way, it's not demand of goods. I mean, we all have to pay for certain goods, but that demand of goods, the supply of goods, and what I mean by that is fertilizer going from £200 a tonne to £800 a tonne, and then farmers not being able to afford to buy it to actually increase the yield on the crops, which creates less food, etc. And you end up with this continuous loop. That's what I mean. It's a supply-driven inflation, not a demand, because if it was demand, you could increase interest rates and people would say, okay, we're not going to do this. You've got a situation where people need to buy what is going to be in a shortage of supply. And this one as well, this is a stunner. This is Bank of England forecast. If things feel tough today, then just wait. Ed Conway's analysis. The pain of energy bills you can't afford, a weekly shop which is unaffordable, of being squeezed between stagnant pay on the one hand and rising costs on the other. That squeeze will cause a deep economic downturn, bank says. Yeah, it's fine for you though, isn't it, Bailey? On your $500,000 a year, doesn't affect you. But this is the catastrophe that they've created. In 2008, they should have let the banks go bust. We could have cleaned all the debt out, the slate clean and everything, and now we find ourselves in a situation, after 13 years of kicking the can down the road, we're now arriving at the apocalypse of the situation that they have created, and we all suffer from it. News today. Non-farm payrolls, that's the big one today. Forecast of 390,000 new jobs, 431 previous. If this comes out higher, the Fed are screwed, because again, it's going to show that the economy hasn't slowed down at all. There are new jobs being created, and he may have to renege, because they're pretty good at reneging on what they say they're going to do and end up doing something else. And increase rates by that 75 basis points to stop the inflation. But then again, increasing interest rates isn't going to stop a farmer from saying, I can't afford the fertilizer, is it? This is a mess. I don't think people have quite grasped what's coming. Unfortunately, Edward has, of the Bank of England, Ed Conway, whoever he is, he's managed to grasp it and he's put it out there. And I keep telling people, but it's like, talking to a brick wall. Gold-silver ratio had a spike in the night. We'll look at that in a minute in the gold and silver charts. We may be in a situation where they may find some support, despite the fact that they got hammered down yesterday. Okay, let's move on. Have a look at the market action for yesterday and start off with the Dow. We'll start off with the daily chart. You can see there, great reversal, 1,063 points down on the official New York Stock Exchange yesterday, trading down to more or less 89%. Of the up move here coming back. Now the market's up overnight, and don't be surprised with the non-farm pain numbers if they try and move the market back to the upside. A break below 89 will be indicate more weakness, and if we break through the low here, then you will see more pain to the downside. But yesterday you'll see that the market was fine. It was stuck in a sideways range. A bit of selling came in towards lunchtime, but as soon as the Dow opened, it just couldn't hold, and it just careered to the downside, as you can see there. Bit of support coming in there. We've got divergence here with a large volume, and the market's moved up, found another oversold with demand, and is now starting to move to the upside. 7 a.m. for the DAX will be the kicker, and we need to get back above the 200 MA, the 50 bar, and the DP in the Dow if it is to move higher. Like I say, the non-farm payrolls can come out far lower, which would be bizarre normally because you would want them to see an improvement in the economy, but I think the Dow's going to be looking for something less to use it as an excuse to bring the market back up. In the German DAX, yesterday you can see the market down here also, coming back to 62%. We started off well, the market traded up, but once it closed back below the 50 moving average in the daily chart, prices then reversed. In the 30-minute chart, you will see this market moving higher in the pre-market, and then we started to see some weakness coming in. We had the first bout down to the DP, oversold. Market bounced up, became overbought, and then we switched to red and followed the Dow to the downside, and prices continuing to move sharply lower. It was a great afternoon's trading. In the 5-minute chart there, you see the market trading all the way down to the downside, and it managed to hold this, and as you'll see from the results there, it was a good day of trading. Also, it doesn't matter about this area here, because if you watch the videos on probability trading, you'll see we had a few winners, losers. The equity curve remained more or less static. It was up, it was down, and whatever. But then once into the trade, you hold that position, and that's where you actually make the money, and then you come out with 3 to 4 times any losses that you've had, and that's the whole idea behind trading. Get rid of the losers. And that's what we do here, and then once the market starts to go, you hold it and you trade it and keep using the averages, etc., to hold the position and move up the time frames. The Dow would move sharply lower, and the DAX, you can see there, continued to move to the downside as well. And then again, once the market becomes oversold and get down towards the low of a market, is a good area to take profits, and if it breaks that, then you can use the next pivot point as well. But yeah, it was a good afternoon, a really good afternoon as the market accelerated. But today you can see the markets are currently sideways on the overnight markets, sitting at the close. Same thing as the Dow. These are the areas the market needs to get back up to. But if we don't, and we start heading south, then again you've got these areas here in the DAX to take out, and this is going to be the crucial one, this low here. If we go to the weekly chart, you will see it's here, and then we've got the 200 MA in the way, and then back down to the 12,000 area. But I suspect that we may just see a little bit of a bounce, just to keep people on their toes today, and especially because of those non-farm payroll numbers, if they can make use of them. And in the GBP JPY, we can see the market crushed to the downside yesterday, back to the 50 bar moving average, 78% retracement. As well, prices up overnight. Why did it go down? Well, the dollar was pumped to the upside. The UK increased interest rates at 12 p.m, which is what you're actually seeing here, midday. And this had a negative effect, oddly enough, as the market was then moved sharply to the downside. You can see this in the pound as well, down yesterday. Normally this wouldn't be the case. The pound would actually rally on the interest rates, but because the attempt to keep the dollar moving to the upside, then of course being on the opposite side, it was crushed. And you can see that there yesterday, but at the moment trying to hold. But we're down to 123 now on the pound. The low in the pound going forward is 114 is where the low is. And then finally in the metals, let's just have a look. We'll start off with silver. You can see the market finding support here, retesting the lows earlier on in the week. We've got 21.97 there for silver should the market move lower, but yesterday it did. It was brought back. Needs to get back above the 5-bar moving average. Certainly oversold. In the 30-minute chart of silver, you can see how yesterday they just rammed the market back through the high. Again, it's that 1 o'clock fix. You get the opportunity to move up beforehand. You've got your 89% retracement, and then the LBMA come in, put the fix in, and the market down. However, overnight, there's some interesting price action here. We've got the market testing the S1 with an increase in volume, and it's oversold. We've got the green parabolic and moving to the upside there. This market has to stay above this low. It's going to be dependent on the news out at 1:30 for the non-farm payroll numbers. If they come out positive, then that's going to be interesting. Which direction will it go? Who knows? Like I say, the whole dynamic's starting to change, because normally you would have seen the pound move higher on the basis that the Bank of England had increased rates. So things are starting to all get in the air and trying to find a new pattern of what is actually happening. But yesterday the currencies were crushed because of this, the dollar moving sharply back to the upside, despite the fact that on Wednesday night the market had sold off, bringing the metals up. If we break the 103.90, then we continue on up to 120, which is the all-time high. And I suspect we're going to get through this, if not today, if those non-farm payroll numbers assist in the manipulation of moving the dollar back to the upside and keeping it there. Meanwhile, gold is a lot stronger than silver, as we saw from the gold-silver ratio, whereas the silver market has retested the recent low of this week. Gold has only come back to 78% of this. So again, you can see why. So silver getting hammered unnecessarily as usual. Crude oil continuing to move to the upside. So again, we've got this inflation problem. I noticed that fuel had gone up 5p a litre or more in the last week. And if we break out of the sideways move here, then we move back up to here. If we break this one, of course, we then move back up to this level here. And that puts us back into even more fuel issues and problems at 138 per barrel. And again, just to reiterate what we saw over the last few days, the potential shortage of diesel coming for this summer as well. So it all adds to it. So there we go. So just to conclude, look out for the non-farm payroll numbers at lunchtime. Don't be surprised if the Dow and the Dax manage to move back to the upside. If they fail to do that, then we need to switch to the weekly charts to see where they are going. Because if we break the recent lows of where the market found support in the last couple of weeks, then we're going to go a lot lower. But don't be surprised, as I say, if they try and bring this back during the morning session at least. Okay, that's it for this one. Have a great weekend, and all things being equal, I will see you in Mondays. As ever, thanks for watching. See you in the next.